Hello, everybody. How's it going? Okay. So I'm going to share my screen. Okay. Okay, let's start the show. Let me know if anybody's here, so we can actually. Let me know if you can hear me. I think you can, right? Okay. Yeah. Okay. Great. Hi. So hi everybody. So today we are going to do the analysis of a market. That is something that I'm planning to do every week at this time. And we are going to look at these charts, maximize it. And so try to understand what is going on and where we are in the cycle and so on. So I'm going to use the indicators that we have available. Okay. So these are three main ones that are available here. So these are indicators that we have developed that are based on the power law information, and we have two different ways, right? And if you follow me before, you're familiar with some of these ideas, but I want to kind of review a little bit because maybe there are people that are not familiar with them. So basically, we are making this claim that we have a general trend, that the Bitcoin follows a very general trend that is called the power law. So basically, it's a simple function of time that when plotted in a log-log chart looks like a straight line. But really in a semi-log chart, because in these in TradingView, unfortunately, it's not easy. It's not impossible, and we have actually we worked on a version that is a straight line, that you can look at straight line, but that's a lot of limitations because it's not something that TradingView does natively. So that chart will be available, but right now, basically, we still use the idea that we have a straight line, and over short terms of over short terms, it does look like a straight line, right? So you will have to, if I scroll here, I will have to go to very far away times, to start to see that it actually bends, that the path bends, and you can go all the way. Let me reset the chart. You can go all the way to the beginning of the history of Bitcoin. And so you can see this curve, right? Because it's really in this chart where you have a log of the y-axis. It looks curved, mostly because it's curved because anything that is not an exponential will look curved. Just an exponential, and if Bitcoin was an exponential, it will look like a straight line, like a real straight line in a semi-log chart, what is called semi-log chart or log linear chart. To make it look like a straight line, you will have to go in a log-log chart. And this is why we can demonstrate in this way that really the overall trend of Bitcoin is a power law. And over the short terms, it does look like a straight line because it does follow the power law. Anyway, So the entire idea is that using the power law, then we can identify areas where the price of Bitcoin is overbought and oversold, right? And so these are indicator that we have here. He shows this general trend, the main trend, and then you have two bands that actually you can decide how far away. Usually, the bottom, for example, it's about 0.4, right? That is a very strong barrier that we seem never to overcome. And so, in fact, you can see here, for example, that we touched that bottom, and for a while, the price actually followed that bottom. It's pretty incredible. So same thing here, for example, during COVID, the price, before COVID, the price was a little bit more bullish than usual. And then it had a correction, but it didn't go below that 40%. So it seems to be like a very powerful barrier that is never crossed, okay? And so even here, for example, if you go back to the previous cycle, again, that 40% was where the bottom was. You see how consistent this is. It's incredible. Now, the tops are a little bit more difficult to identify because they seem to decay over time. We wrote a Medium article to show how this decay works, and it seems to be very, very consistent. And you can read a Medium article if you follow me on X to see actually how I calculated these tops and how the decay is included. And we try to do it here in this blue line. So the blue line is actually trying to follow precisely where the tops are. Is not adaptive because interacting with the followers on X sometimes make me understand that people have misconceptions, and it's interesting because it's a way of trying to learn from the users and from the followers what could go wrong, what maybe misunderstanding there are, because I cannot think about all this misunderstanding by myself, because it's difficult to think about how people can misunderstand something. Maybe there is some failure from my side in not explaining enough or giving the information enough. Nothing in these charts. It's there is nothing. There is nothing wrong in actually adapting to new data, right? And we do have an indicator that is a little bit more adaptive. It still works within the confines of the equations of the model, etc. But it's and in fact, it's actually a good thing because you don't want to use future data; you want to use past data. But you can use the data up to where you are. There is nothing wrong in that. The only thing will be wrong if you continuously adjust, where basically becomes like a moving average, right? A moving average is always delayed. Even that is okay. You just have to understand that it is reacting to data, is not predicting anything. But in these models, we are not reacting, we are predicting, right? So we have a model that we believe that is a general pattern for Bitcoin, this straight line here, this middle line that is supposed to represent the general trend. And this is a simple equation. It's basically the number of days from the Genesis birth to a power that is 5.83, so something close to 6. It's a simple equation. Same thing with this blue line. It's not something that it finds the tops because it tries to adapt to the tops. It actually, it's calculated ahead of time. Then all what you do, it's actually you synchronize with the first bubble. You say, let me synchronize this top with the first bubble. All the others will come along because the part of the theory is that these bubbles are very, very predictable. They're happening at very precise timing, And so once you synchronize the first one, all the other one follow. So that is the entire idea behind this approach. But it's not really, even the decay that you see here, right? Because the first bubble was much higher, then the second one a little bit smaller, and then the third one even smaller. Even that is an equation. So it's not, again, that we are trying to fit it to the existing data. We have an equation. Of course, the equation takes in consideration the data points that we have, that are in this case for the bubble, unfortunately, are only 3, that makes the prediction for the size of the bubble weaker in comparison with the general trend, because we are trying to do everything in a very scientific fashion. We are not trying to draw things by hand or make some kind of hypothesis based on opinion or based on indicators that reacts instead of predicting things. It's a very different approach from anybody else that I know. In fact, I cannot think of any other data analyst that is using this kind of approach, that is all based on real science instead of some vague feelings about how the market is going to behave. So right now, these bubbles, like, this is the best prediction that we have in terms of what we are going to do. So as we do this analysis, market analysis, I will always try to tell you how we are doing in comparison with the prediction. Okay. So we have other tools below. For example, this one, it's an oscillator that calculates the difference between the power law and the price. So the white line is the power law. Basically, it's the general trend that is subtracted. So when you are subtracting the general trend, you're left with the oscillation. And they just posted online an analysis where I basically average these cycles, from the beginning to the start. We have this way that is unique to a particular approach of basically giving the timing of these cycles in terms of hours. So if you start from the top, that is 12, then the bottom is 3, then you have a transition from the bear market to the bull market. So basically, if you're thinking of season, it's almost like the end of winter, and you're going towards spring, then you're going to have summer, and so on. So the 6 o'clock, right now we are, for example, 7:05 or something close to that. That is the current time, 7:05. And so we are more or less here, right? So you can see here that is equivalent to here. So you can always compare where we are with the previous cycle by looking at these indicators and then comparing the timing, the color, it's all color coded. You can see that it's transitioning from this dark yellow to orange, right? So this where more or less we are, and you can compare where we were in the previous cycles. But the work that I was describing is I took the data from all the cycles, I organized them in terms of hours, so I superimpose them, and then I average them, and I calculated what is the likelihood of having this particular pattern that we observe. And the pattern, it's very, very similar to this blue line. The blue line represents very closely what happens during these cycles when you average them. And I calculated by taking averages over 1 month, what is the likelihood that pattern that we observe, this curve that I'm using here to describe the shape of the cycles, is due by chance, and is almost nothing. Like you get values like 0 with 80 zeros, 1. It's completely crazy. So it's only 3 cycles, so it has to be taken with a grain of salt. But the shape and the precision and the regularity of the cycles, it's without any questions. It's really a very scientifically proven fact. Anyway, so and I know that here is confusing, for example, because we had a double top, And so this double top is confusing a little bit. So it's a distraction. Something happened because they can be local event or local. One will have to go and find the news, but it's like correlating things after the fact. You say, okay, there was this event that seems to be correlated with this. We need to focus on the data. So something happened where a market got really bullish before it's supposed to be relatively to the other cycles. But the interesting thing that anyway we still had a top where the top was supposed to be historically relative to all the others. Same thing with the bottoms. They seem to appear at very similar times. This was actually COVID. So this is the COVID event. And then here, this is where the bottom is. And they seem to appear all the time at the same place. See, this is the bottom. So it's very, very regular, and you can use this regularity to actually know where we are relatively to the cycle. So you can use these three things combined: the general trend, the color coded, where we are relatively to the power law. If we are above, it's color coded red, yellow, something in between, then green when we're reaching the bottom. We have areas where in red we are showing where the price is overvalued because it's above the general trend, and in green, this shading. It's you can call it a bear market. It's not really a bear market because we really, in Bitcoin, we have only one bear market. That is when we're coming down from the bottom. Everything else is bullish because even when we are below the trend, the general trend of the power law, we're still going up because we are going along this line that is the power law. And the power law, it's a power of 6. So it's still moving upwards. So basically, the meme of 3 green bars and 1 red bars is correct because we spend about 2 years along this line that is still going up even if we are below the trend. We spend 1 year going up all the way to the top and then 1 year down. So basically we have up, more up, and then down back to the bottom. But it is amazing how incredible the pattern, how precise the pattern is, because it seems to know that it needs to go back there. This is how magical this thing is, because every doubter, every person that doesn't understand it needs to explain how regular this behavior is, okay? But we follow this bottom line, we reach the top, then we come back to the bottom, and we move along this bottom again. And we have done this for 15 years. So hopefully, I hope that the trend continues to be like this because, first of all, it's a very healthy way of behaving. And second, it's predictable. It makes us our prediction better. And we can use this prediction because a lot of the things that we are trying to do here is to actually learn how to play with these cycles where once we reach the top, we can sell some of our assets and then maybe buy back at the bottom, okay? Or if you are somebody that is just a pure hodler, you can avoid buying at the top, right? You can hold on your money and then wait and buy back at the bottom, or maybe buy less, buy 20%, instead of 100%. So that is the entire approach that we have here. Hopefully I explained these 3 main indicators. This again shows the deviation from the trend. There are different ways of visualizing these. You could do it in a way where you can do it relatively to the trend. If you do it relatively to the trend, it will show large oscillations relatively, because you can see much better how big the first peak was relatively to the other ones. Or you can do it in a way where it's relative to the price. And I kind of like this probably the best because it shows a much more uniform. In fact, this is what I use to create the pattern, with very, very regular pattern of averaging the 3 cycles, because you can see how much more uniform they are if you do. So basically you take the difference between the price the trend, and then you divide by the price and multiply by 100. And in that case, you have a much more uniform changes from the top to the bottom. And you can use it again for your advantage to know where there are areas where the price is over bought and where the price is oversold. Or you can have some kind of like an average between these two approaches. That is what I mean. That is what we were doing before. Anyway, so and then this is our clock, right? It's basically the spiral clock that we show so many times in our account, but we have kind of linearized it, and so we are showing it like if it was a sine wave, and then it took the negative part of a sine wave and made it positive, so it's more consistent, and you can follow it along and see where we are in terms of the price. So here, what really matters is the changing in color. And differently from this changing color that is based on price, this one is based on time. So as you come closer and closer to the top, it becomes red. Usually the tops happen around time 11. So this is really 12. This means we call it top because it's kind of a end of a cycle using this clock analogy. Really, it seems that the tops happen in a very regular fashion. In fact, in the graph that I mentioned, this is where we get the highest stats, that there is some regular top that happen all the time around 11. We will see in a moment what that means for this particular cycle. So using these three indicators, you really can identify very, very precisely what is going on at any moment and what is going to happen, because this is an important thing. Differently from many other type of indicators, we are trying to make predictions. So we can extend the clock in the future. We can extend this blue line in the future. The main problem with TradingView, though, unfortunately, is that we cannot extend it all the way. I would love to extend it all the way to the next cycle. In fact, identifying the bottom. Maybe we can have like a little table with this information. I'm going to improve it in this way. But TradingView, unfortunately, gives you only 500 a day ahead. That is still amazing, right? To be able to predict things 500 days ahead, more than 1 year, right? 1 year and a half, something like that. But it doesn't allow us to see where the top is here, unfortunately. The top is going to be around so if we go with 11, so if 12, it's actually December of 2025. 11 is going to be something close to September, something between August all the way to, let's say, October. So in this window, this is where we are going to expect the top, very likely September. So September 2025 is when we are going to have the top, and that top should be about $210,000. So this is why here is shown only 183, because it's not quite the top. It's 500 days from now. Same thing with the clock, right? We are projecting it in the future, so you know where we are at any given time. Now, this cusp, what this cusp means, right? Again, this doesn't mean that we reach a top. All what it means that it's a very important phase of clock, and that phase is when we went from the real bear, like again, it's not really a bear, but if you want to think, it's the bottom of this pattern. But then we started to go up. We spent like about 1 year there, and basically we are preparing because we are close to the halving. This green bar is the halving. We are close to the halving, so we are preparing for the real bull. But really, the real bull is here. It's at this cusp, because you can see here it's the transition to full bull. This is when things really became exciting. Now it could be that it's a little bit, few months, like right. This was supposed to happen in December, the last cycle, the transition to the full bull. And really, we can say that maybe, here when things started to pick up very quickly, right? Also, it's an important point when the price crosses that white line. That is a very fundamental time for understanding the cycles of Bitcoin. And so last cycle, we got excited. We went actually above it. It was not the right time, so we came back. When COVID reset everything, say this is a little bit too exciting. You should not be over there. Come back. And then it recovered. And after the halving, we still hovered. We was still no time to cross it. And then as we came to this transition to the full bull market, we crossed it and it went up. And you can see also what happened the other cycle, to see how regular this thing is. Again, if you're looking here, the transition to in this case, we really over there. We stay within this confine of this white line and the blue line. And then at the time of the transition to the full bull market, you see, I'm not making it up. It's really true. Things start to getting exciting, and we have this year. We spend an entire year going up. It will be 1 year of full bull market. Is pretty exciting, but that is not there yet. We are not there yet. So it's very important to put all this stuff in the context, right? So we have 3 cycles that we can study, and they have been always the same. So yes, things could be different, but the entire idea is that actually, Bitcoin likes to repeat itself. It's very periodic, it's very systematic. Yes, there are some variations in how every cycle is, but there are details. The general pattern is still there. So when will be the full bull market? It is basically the same equivalent component that I have here is going to be here, right? When that is going to happen? It's going to happen at the end of this year. Okay, now it's possible that the bull market starts a little bit before, like it did in the previous cycle, but not much. Usually, see, this was the end. If you want to start here, maybe the crossing with the white line, it was November. If you want to go here, it was mid-October, right? So October, November, this is when we should expect things to heat up and then getting ready for that 1 year of bull market. Right now, we are in this funny place where we are after the halving, nothing usually too exciting happens. If you go all the way to the other cycles, there is the halving. In this case, we were just continuing going there, in the bottom line. If you go to the previous cycle there, very similar thing, right? You see, I'm not making it up. Oh, the same way here, we started, in this case, actually, the bull market started to happen a little bit later, it took about, okay, should have been here. Yeah, almost a few days later, like mid-January. This when the bull market started to pick up. You see how incredibly regular all these things are. So where it happened 3 times, where things repeated themselves over and over in the same fashion. So we can expect that things will happen in the same way. So why we are so far away relatively, not too much here, right? Because we are also hovering just below the white line in the last cycle. And here we went almost all the way to the white line. In fact, we crossed it a little bit. And then Bitcoin say, well, I'm not ready for that. I mean, it's not the right time. Let me go back. It's pretty amazing. You can think that all this is due by chance, but when you see the same pattern repeating over and over again, there is probably something, So this is where we are. So we want to understand, because we call it the weekly state of the market. I wanted to give you like an introduction because you cannot really understand our type of analysis unless you put it in the context of all the other cycles. You now know, right? So this is almost like the white line is becoming almost like a resistance level. Now, today we had a kind of bullish day, right? We went up. It's nice. It's great. The point is, are we going to cross that line? We will see. I think it's not likely. It's not likely that we're going to cross it because historically we are not ready to cross that line. So I don't think we are going much higher up. we're going to monitor it. It can happen, it kind of burst through that line there, but then we'll see what happened. We went down and we continue to hover around that. So all what we can say, it's what, we are no magicians. I wish I was, I cannot predict the future unless I use these tools that are available, and the tools are telling me that right now that line should be a support line. So that is the thing to watch, right? Are we going to go much higher than that? Are we coming back? Are we staying there? I don't think in general, and this is something that we can monitor every week to see if this is true or no. I don't think in general we are going to break this pattern, and even if we break it, it will be something like this where, okay, we got really excited, still, like, again, it didn't happen until we were closer to this transition to the full bull market. But, instead of following the blue line, we went up and we had actually a double top, right? And then there was another top over there that is more closer to the timing where we expect to have real tops. So you could have things like this, right? Where there is like a variation on the theme, and there is like something else happening, and then we still respect the cycle because the things that need to happen at the right time happen anyway. So are we going to cross this white line? Right now, my feeling is not, that actually this is a white line and it will be extended, right? So we can actually extend it. That is the next thing I can do. I can actually extend this line. I can improve it in that way. I should extend this line. Okay, so we can extend this line, like this, maybe a little bit lower. Okay, and I think this will be kind of a resistance, for the price. We should hover there until we reach the end over here. Then things can go crazy from there. Not necessarily following this blue line, but kind of parallel to that line. And then we should reach the top here, like around September, October of 2025. Then in that case, it should be 210. So this is, I'm giving you a long projection all the way to the next year, but I'm expecting the price to hover this. So when we meet, on a weekly basis, we can look. I have other indicators that we can dive in that are more based on patterns that I'm observing. I can show you next time that tell us actually fluctuation over a range of about 2 weeks, and they are very, very precise. They seem to work pretty well, and so we can make some. It's not something that I will count on it completely. It seems to work. It has like a 70% winning rate. If anybody is interested in trading on these scales, maybe you can use the information, but it gives us a feeling of what to expect, in the near future. But in general, this is the idea. We want to monitor what is going on. Are we following along this, the power law trend? As we coming closer and closer to the full bull market, we can get ready to the real full bull market. In terms of DCA, for example, I will say, continue to do your stacking. Maybe as we come closer and closer to the full bull market, you want to reduce it a little bit. We are trying to come up with a formula that is kind of an optimal approach. But 50% is probably a good approach, because maybe you want to save some of the money. If you have like a regular schedule where you buy Bitcoin, buy USDT, because eventually, if this theory is correct, we are going down, and you will have a good, a better deal in the future. Now, what are we expecting to be the bottom? So if you go along and you follow the theory and our projection, etc., the bottom for the next cycle is about 70,000. So anything that is below that 70,000, make it 70,080, something like that. It's still a good deal. By the time you go above that value, you wait long enough, where we reach the next bottom and you should get a better price, but it's up to you. You can just simply continue to buy, but maybe stack also. I know it doesn't sound good to stack USDT, but the entire idea is that if you want to really understand these cycles, you can use it at your own advantage and multiply your Bitcoin. I don't know if you heard me saying this. If a power law is correct and we have this power, time to the 6, if we wait 15 years, we should see 64 pair in terms of USD, right? Your investment will be worth it 64 times more than today. Now you have to correct for inflation, etc. But the idea, this is why we insist so much in trying to learn how to do this. We call it riding of the waves. We are trying to use this knowledge to actually tell us when it's a good time to buy, it's a good time to sell. I projected that in 15 years from now, instead of being 64, you get 1,200. Okay, that's how crazy it is. Now, that number needs to be, again, taken with a grain of salt, because it means you're selling at the top, you buy almost, buy back at the bottom in a perfect fashion. So, reduce that efficiency by 50%, right? That 100% efficiency by 50%, because none of us is going to do that timing so precisely, even using these tools. So let's say 500 or even 200. It's relatively easy to multiply by a factor of 2 or 3 that 64 if you play with these cycles, and it's such an important part of Bitcoin. And this is why we get excited, because I don't understand why a hodler will get excited about the price going to 300,000, let's say, if he goes there, and then coming back again to 80,000. You don't gain anything from that. But if you can use the cycle at your own advantage, where you actually sell at the right place, so it is, by the way, what the long-term holders do. 60% of the long-term holders take profit. They do. And they buy back at the bottom. So why don't you do that? Try to do that too, because that will multiply your Bitcoin. Just be careful. Do it in, with awareness, maybe 10%, 20%, according to your risk level, but that is the entire idea of using the knowledge of these cycles. Anyway, we can look the ETFs too, if you like, and we'll take some questions first while I'm getting ready to show you there is not much excitement in the ETF, but I can show you some data from there. Let's see if I can actually switch, it works. Okay, so let me take some questions. Greetings, Giovanni. Hey, Isvan. Cash indicator, is going to be available. I'm still waiting for an answer from TradingView. I submitted it for approval. Sotto titoli, okay, we can try that. Caption, if there is automated caption. Was a research in simulation slow waves, a psychiatrist, and now I'm somehow here a big fan. Okay, that is my other life, right? My work on sleep research. I'm glad of it. You actually found that work. It doesn't follow the power law, because there are Mac Halloran is asking, do you think the total crypto market cap also follows the power law? It doesn't follow the power law in the sense, that is actually kind of an interesting question. We could average all the cryptos and see what they do. Now, they do follow Bitcoin, right? They follow Bitcoin very closely. It's almost like a flock of birds. They go up and down, go up and down. And I even have actually an algorithm that is taking advantage of that. When the real bull market starts, we can activate that, and we'll make it available to the Discord community. It basically buys and sells cryptos. Again, don't put all your money in this algo, just a little bit, for fun, and see how it behaves. But we multiply almost by 6 our Bitcoin in the 2017 cycle, because they do this. Some of them accelerate and they go faster than Bitcoin. Some of them go slower. Then if you can cycle through them, right? You can identify the one that are slower, and then buy them, sell them when they go back to the top. It's almost like a cycle through all these coins. And so you can actually use that information to multiply your Bitcoins. But the general trend, I don't think that it follows a power law in the sense, that you will still average a bunch of coins. I mean, it's an interesting question. I can look. But in general, we didn't find yet one coins. Some people mention Kaspa. It's true. Kaspa does follow so far. It's changing recently, but it looks like a very regular pattern, differently from many other coins. Now, the problem with that is that with Bitcoin, our strength and certainty about this behavior over the long term is based on the fact that they did it for 8 orders of magnitude. That is just unbelievable. There is no other assets that ever done that, and no Kaspa, no anything else has the kind of track record where we have a change over 8 of orders magnitude. This is when you will be kind of certain that yes, it's a power law, and they did it over, because one of the main characteristics of power laws is to scale, right? It's showing the scaling variance property. If you don't change enough scales, you cannot claim really that you're dealing with a power law. It could be an approximation, So we don't know. We don't know if there is anything else, because any other coins doesn't have the history of Bitcoin. And by the time, they could grow to that level, they died, they disappear. So there is no coin like Bitcoin. There is really no second best, So far, Kaspa is kind of, but it's too early to say. And nothing else so far that I look at, not Ether, not Litecoins, nothing follows a power law. So it's very unique to Bitcoin. And then Mike Allen says, if so, will it result higher power, lower volatility? Yeah, one thing we can do a catalog of all the other cryptos based on how well they follow the power law. I don't know if there is anything else to learn, but it could be interesting to show maybe like an average of all the coins, relatively to the power law. It's good ideas. It's a very good idea. But let me see if there is anything to learn about. I'm trying to stay away from the crypto war, mostly because a lot of my followers are maxis, and so I don't want to talk too much about crypto, but I will never say, hey, buy this crypto for the long term. There is no one single coin, even Kaspa, there is no one single coin. I'm sorry for that, but there is no one coin where I will say, I'm going to buy this coin for the long term. If I am interested in any other crypto, it's because I want to leverage it to buy more Bitcoin. That is the game that I want to play. But maybe there is something to learn about that. So I will do some more study and maybe describe the behavior of the coins as an average. That will be an interesting thing relatively to the. Let's see if there is maybe even a graph similar to that one that they produce for Bitcoin, with the oscillations around the trend, and see if there is like an average behavior of a coin, because that will be an interesting thing, because maybe the bull market for the coins happen later, right? So we can identify that is delayed, and when it's delayed. That will be interesting, because if we could use that, and again, very carefully, maybe putting a little bit of our money in a bunch of, like a little basket of crypto, just, and then sell them at the right time, right? So we don't get crushed, because some alts go faster than Bitcoin during the bull market, and you can make a quite a good money. Like Saverio, Saverio had my son is talking in the chat. He had 1 Bitcoin, right, Saverio? We had 1 Bitcoin, and we multiplied this Bitcoin by 6 in one single month by understanding these type of things. We didn't have yet the understanding of the cycles, but we had this algorithm. But probably was using something like that, where during the bull market, the coins go even faster up, So, yeah, I mean, it's okay, right? It's not really gambling, because gambling is like you completely don't know anything. You put your money on red or green, and you hope that it goes one way or another. We are trying still to understand patterns, but it's a little riskier. It's more risky than Bitcoin, And so I will be careful if you play with crypto. But it's a good question. He made actually Mac Hallon had a very good idea. It made me think. This is why I love to interact with you guys, because you ask good questions, and then I start to think about stuff, and we learn something new. So it will be interesting to see if there is a regular pattern with the cryptos. Now, these cryptos change every, which crypto we choose. Maybe we can choose the top market cap or whatever, or maybe make different baskets. And then we can do like an average and see how they relate to the pattern that we see in Bitcoin. Because we have these hours, right? We say 12, 1, 2. So that could be really cool, even just for fun. Let's do it. I will do it. It's very interesting, because if, let's say, that, for example, it happened before, the bull market happens before for the crypto. I think it usually follows, but then it follows when, okay, statistically follows 1 hour later, 2 hours later, or something like that. That would be really cool to understand. So currently 50% BTC, 50% CAS. I, dodged. It's gambling, right? Okay, that is gambling, because if you start to put too much money in crypto, I think you are gambling. But a little bit with the idea that you want to multiply your Bitcoin, because in the end, I always suggest by the time we are at the top, you should do 2 things for sure. Go all the way Bitcoin. Even if you have any alts, sell all your alts. Because even Casper, I think Casper will crash faster than Bitcoin, so you will be exposed much more with any crypto. I don't think there is any crypto that is more resistant when we are at the top than Bitcoin. And if you can, in fact, sell some of your Bitcoin and get in USDT. That is my general advice, on how to proceed with this. But again, it's not financial advice, it's scientific advice, like you do whatever you think is best for you, based on this information. I just give you the information. Okay, so let's look at some of this stuff, right? So the white line is the price, and the yellow one is actually the global liquidity. Now, some people say, oh, this is not a good meter of global liquidity. Well, maybe next time we can look at 2 or 3 of them, 2 or 3 candidates. This one is something that takes an average of many banks, many funds, etc. So it should be pretty close. It does. So what I noticed that I did, and I'm going to post this graph soon, it doesn't correlate with Bitcoin in a very strong manner, like some people claim. And this for sure is not a power law. It doesn't have a power law relationship with the price. And in fact, it looks like, at least with this particular indicator, it's kind of almost becoming a weaker relationship over time. So maybe it was stronger a few years ago, but now it's becoming weaker. And I don't know what it means. Maybe we can study that and try to understand it. I'm going to use more, because some people push back and say this yellow line is not a very good line. I'm going to try to find other ways of measuring global liquidity. But right now you can see it, right? Global liquidity is going down. In general, it looks like sometimes, but you see, this is why okay, it helps us a little bit because we say, let's say this is what is true in the previous cycle, like even with this measure, right? So it looks like many months before the top. So it's not that useful, right? The bottoms here are kind of associated with the global liquidity bottoming up, and then maybe it's nice that is, at least in this case, right? It looks like it's leading Bitcoin behavior, but okay, it's not super useful because months ahead we know already, that Bitcoin is going to do this thing of going up. It's not going to help out too much. If see here, we had almost 1 year before, right? 1 year before, liquidity started to go up, and then we had Bitcoin going up, right? And we reached the top 1 year later, and there was no indication. There was some kind of, okay, maybe flatten out, fine, but I don't know. I don't know what. If this thing is super useful, I don't see it as super useful. Maybe this particular measure is not that good, but in this case, okay, again, March 20, we had the real top was here about 1 year. So okay, we can say if global liquidity goes up, we are 1 year away from the top. Okay, but we have other ways of telling that, right? Because it's internal. So, see, when I have a measure like that, it's relatively weak and it doesn't give me powerful information. It's something that we can look because, people need to have money to buy Bitcoin. So it's true probably that you need to have, this rotation, but it's to have more liquidity available to buy the Bitcoin. But it seems to become weaker over time, this correlation between Bitcoin and liquidity, but we can keep an eye, right? So right now it's not going up, right? It looks like it's in this region where it is flat. That is usually corresponds with not being ready, and we know, right? Because we are not. If we were at 9 o'clock when we have a really 1 year, maybe this is when liquidity picks up at 9 o'clock, right? We can check it out. Maybe we can superimpose it with the clock. In fact, let me do that. Okay, we can do this. All right, let's see. So yeah, no. Yeah, in fact, actually, look, if at least for this cycle. So if we use this one, like I say, we could find a better one. But yeah, in this case, you see, it started. That is kind of interesting, right? When the full bowl was ready, this when the liquidity went up. Okay, and what about the other one? It's not that regular, right? It happened much before this time. This is why I'm saying seems that we are kind of now losing a little bit of a correlation. So it was more or less where we are right now. Last bull, last cycle, because right now this is where we are around 7 o'clock. This is 6. This is 7. The liquidity started to pick up, and this is maybe this is why we had a early top here, right? Because of the liquidity. I don't know. It's an interesting pattern. We should study this better, right? There are certain things I am more confident and other things that I am less confident, because maybe I'm kind of exploring it with you right now. But we can do some study, more deep studies when I have a chance, and because a lot of people follow this liquidity thing. And then, again, kind of, here this where the historical top was, similar that this went down from there, but again, not exactly, right? If you had to use liquidity to determine where the exact top was, you will be screwed, right? Because it took longer. Bitcoin started to fall down before the liquidity started to fall down. So we want to use something else, like these hours, etc. So liquidity per se can give us like a general feeling of where we, when we are kind of close to going up, but it's not going to be a very powerful indicator in terms of identify the real tops and the real bottoms. And even here it was flattening out already. Here, can you use it to identify the bottom? I don't think so, because the real bottom happen here, and the liquidity, liquidity started to happen. So the real bottom was here, and it bottom up before. Okay, maybe it kind of alerts you that the market had enough. It doesn't want to go lower than that. But Bitcoin bottom happened later. So again, we want to use this could help, and we can still analyze it, and we can maybe even integrate it in some of our indicators. But it doesn't seem like the best indicator. There are some people who swear by the liquidity, unless, like I say, I don't have a best in liquidity indicator, and we can try to find another one. But by looking at these, it seems to add a little bit of information, but not incredibly amazing information. Now this other one, the blue line, I'm doing the wrong one. The blue line, it's MicroStrategy, and you saw what they published. I want to do more with MicroStrategy. In fact, I found that there is this beautiful relationship between that. It was kind of obvious, but I don't think nobody ever showed that. But that relationship disappears if you go early, right? Because MicroStrategy was kind of flat. So it didn't do anything, until they decided to buy Bitcoin. In fact, that is the other thing I need to show in my graph. That if you go before, like power law started when sailors started to buy Bitcoin, but before that, it was simply flat. It was not doing anything, while Bitcoin was going up like crazy. Then finally, they decided to buy Bitcoin, and the two almost are basically like a function of each other. Now, I don't think MicroStrategy drives Bitcoin is the other way around. We can do some Granger causality test and see if there is any evidence of MicroStrategy driving even locally Bitcoin. I doubt it, but let's see what the data shows. But you can actually write an equation that tells us, given the price of Bitcoin, what is the price of MicroStrategy? Because there is this beautiful power law. It turns out it's a power law of 1.3. So actually, if you do the log of Bitcoin versus the log of MicroStrategy, and then you see this beautiful power law, it's fuzzy. It's not like a straight line or anything. It's fuzzy because there is still noise. They are not exactly one-to-one. It's already a miracle. I don't know, because what happens? Do people buy and sell? Probably is what happened, right? They look at the price of Bitcoin, and then they buy and sell Bitcoin, maybe through the futures or the other mechanism where there is some kind of transmission of information almost. In fact, one could analyze it almost like that, like if it was information transfer between one system to another. I just started because I do like 300 things, and I had in mind to do this thing, and it's really cool. And I'm pretty sure that Saylor has people studying these things. I don't know if they use power law language or whatever, but the power law, I almost see when you work on these things, you get intuition. I had the intuition, but there was a power law. I betted on it because I say they are going to follow each other, but it's not one-to-one. It's what many people would think, right? If you don't understand power law, you will think that they are simply related to each other by one, right? That there is some kind of maybe multiplicative factor, but it's one. The multiplicative factor, because this one of things that people ask, what is them? There is no multiplicative factor. It's a power. So it's with a power of 1.3. And so that means that if you double, I made a table, if you double Bitcoin, you're not getting 2 times MicroStrategy, you're going to get 2.5 or something like that. You get an advantage, you get some leverage. You need to go all the way to 10. So 10 turns out to be 20. Okay, so you have instead of 10, if Bitcoin goes up by a factor of 10, you get a factor of 20 for MicroStrategy. If this power law continues, right? We don't know if it continues in the future. It depends. Does it need to for MicroStrategy to continue to buy Bitcoin? If they stop buying, does this thing disappear? But see, that is the beautiful thing of actually updating, because some people think, oh, you're using new data. Yeah, of course I'm using new data. Like it will be bad if you change the model, you fiddle around with the model all the time and you're adding random stuff to it. But understanding how it behaves relative to the new data, that is a good thing. There is nothing wrong with that. And so we will monitor, we will continue. So maybe next time I will show you the graphs, etc. I'm a little afraid sometimes to click too many things, because when I get lost, but maybe I can find a way of presenting you the things in a more organized way so you can see it, But you can go to my hacks, because I have that graph of how Bitcoin and MicroStrategy relate to each other. It is in a very regular fashion with this power law. Now, it looks like, if you look at the data, and it's not just the recent data, because remember, it was, MicroStrategy was holding Bitcoin also during the last cycle. So it was, in fact, they bought a bunch of stuff at the top. I don't know why they do that. They should use these and buy at the bottom, not at the top. But it looks like it was overvalued, right? So there was MicroStrategy was overvalued when the price when the price is very high. So there is a little deviation. Now, we don't know if it is some kind of evidence of breaking the power law, or maybe it corrected itself, because when at the bottom it corrected itself, right? It follows very, very nicely the power law. So we need to get more data, right? But it's still cool. It's the majority of behavior is along this power law. We will see if it continues, because then there are things that we can play with that, because maybe we can look who leads what, maybe we can buy So there is something that I don't know yet. I need to understand it. Maybe we can understand better how the two play with each other. Maybe I'm making a graph of who leads what using some kind of grandeur causality, etc. And then maybe one could play with that, again, with the entire goal of multiplying our Bitcoin. I'm not ready yet to do all that kind of analysis, but it's something that I want to explore. But right now, they look very synchronized. They are actually basically almost like a carbon copy of each other. Very, very close. You can see the behavior, right? The blue line and the white line, they are very, very similar to each other. Let me put this a little bit lower. Yeah. So it's very nice, and but it's more complicated than just being a copy of each other. It's this power of 1.3 that indicates some kind of leverage in favor of MicroStrategy. It's not enormous. It's not enormous because it's not like a cube or 4. It's 1.3. It's still something, That means that MicroStrategy is leveraged relatively to Bitcoin. But it's, of course, some people claim that, but we have a number now. We have an equation. We can write this equation. But in fact, next time I will show you, we'll superimpose on this the equation that you get by, so basically the model, you can derive a model, given the price of Bitcoin, what the model says the value is. Because if it is above that, it means that it's overvalued. So that could be one of the things that we could do, right? We could draw the model in comparison with MicroStrategy. And if it is above, it means that is the same thing that we do with Bitcoin. It means that it is overvalued, And so somebody wants to buy options, etc. One could do that. That is one way that you could use it, because eventually we'll go down, because this is what it does, unless we are in this region where the price is very high. So we will need to monitor that a little bit. But even there, it says that the price is overvalued anyway. So it's interesting. It's very interesting. There is a lot of information there that we can extract. And then, this is a graph of the ETFs. So basically, the green dots, green bars means that was a inflow. The red one means that it was an outflow. The green line is kind of an average, moving average of the ETFs. I didn't spend a lot of time studying the ETF. That is the other thing. I will download the data and see how they relate to Bitcoin. I bet, it shows that there is a relationship, of course. I don't want to make a guess. Is it a power law? I don't know, because we have so little data, that we don't know. But let's see if there is anything to learn. And at a certain point, Sins was saying that it's actually predictive. We can see. Let's see if there is a pattern. Because if it is only reactive and we see, the price of Bitcoin went down because there was an outflow, it doesn't help us, right? We want to have something that allows us to make some kind of a prediction. Maybe there is a way of showing that the flow is predictive. I don't know, because I didn't study it yet, so I can show you how it looks like. But again, different from other people, we say, this is what happens. We had this inflow, and then what? What do we do with that? It looks like it's not as exciting like in the beginning. It's calming down a little bit, right? The last few days has been positive relatively, to the outflow, and this maybe why there is this pump. But I want to find a way of finding some kind of predictive relationship that tell us, given what happened in the last few days with the ETFs, this is what we're going to expect for the price. I'm going to work on that, right? Because otherwise, it's nice to look at and nice to learn about it, but that is some of my frustration when people show this, what happened with the ETF. Okay, yeah, it's interesting information. Okay, there is more incoming than outcoming, etc. But what do we do with that? Why is it useful? So unless we understand how they relate to each other, and let's do it. Let's get the data and make some kind of study about that. But it's in my list of things to do. So this and this other graph is showing, the same thing, but now the different colors are the different companies, right? That are buying ETFs. Anyway, let's see if there is any other question. Total market cap, similar to BTC pattern, mayors contain power law structure. Total market cap, what do you mean, including all the halts? Yeah, I'm a little bit, market cap is a little bit, it's kind of fake, because, if there is a coin with billions and billions of, and there's a supply, imagine there are coins like that, right? They are increasing their supply all the time, they're making more coins, etc. Then you will see a signal that is, the market cap is going up. But it's going up because there are more shit coins coming in. We are making more and more of this shit coin. What does it tell us? It doesn't really help us too much, right? So this is why I work always with the price, because you are producing more coins, and these coins are not valuable really per se. The market cap will go up, even with Bitcoin, right? What does it help me to know that the market caps goes up versus the price? Because you are confusing two things. You're confusing the production of coins and the price, and we know that the production of coins is programmatic, so it's already a known signal, it's not useful. So in fact, it can confuse things. But we can do like an average price, and we can take the different coins, maybe give them different weights. I like your idea. I like a lot your idea, McCallum. So let me work on it. Maybe you can DM me with your ideas. DM me on X with some of your proposals, and we can explore it. It's something interesting to do for sure. I mean, some kind of index, like an index, and then a halt index relatively to Bitcoin, because if somebody wants to use it, we are semi-maxi, in the sense that I would never believe that a coin unless some miracle happens, a coin has a value per se and it's a long-term investment. And the only long-term investment is Bitcoin, and among all the possible investment. So I am maxing in that sense, but I don't mind to use knowledge to multiply Bitcoin. If we can do it, we can multiply Bitcoin, and there are different ways to do it scientifically, systematically, logically, and without doing any degen things. Then why not? That is my philosophy. Do you guys have any other questions? Because we can wrap it up here. I'm going to do some more work on the liquidity and on the ETFs to see if there is anything we can learn. And for sure, MicroStrategy, we already know we are on the right track with MicroStrategy. So next time, I will have some kind of indicator that is our model of MicroStrategy. Maybe we can open it like his own chart. And what he will tell us, are we overbought or oversold relatively to a model? So if anybody wants to use that information, they can. Maybe we can learn. Some of my followers are kind of experts on MicroStrategy, and they use options. So maybe we can learn something about that, and we can try. So maybe you can even there is actually a particular person that maybe I can invite even as a host, and maybe he can tell us more. As a guest, and maybe we can learn something from him about options. But using this new information about MicroStrategy that we're developing, so that will be really cool. But anyway, any more questions from the people that are still here? If you have any question, please write it in the chat, and so I can answer the question. Okay. So if there are no more questions, I will conclude here, and we can meet each other again next Friday. I'm going to do this on a regular basis, and we are going to add more and more stuff to maybe understand better what is going on and different things we can do to ride these waves. Okay. Thank you, guys. Thank you so much to follow me and to be here. I will see you soon. Bye, guys.